I'm here in New York City for REIT Week 2019, NAREIT's Investor Conference. Joining me today is Michael Schall, President and CEO with Essex Property Trust. Michael, thanks so much for joining us.
Hey, it's great to be here with you.
Now, what changes are you seeing in rental affordability across your various markets, and what does that mean in terms of Essex's ability to raise rents?
Yeah, rental affordability has become a bigger issue on the West Coast as rents have generally outpaced income growth on the West Coast. So we're seeing that more and more as a constraint to growing rents, especially in the more affordable price points. Fortunately, more recently, in the last several years, we've seen income growth reaccelerate to be above rent growth, which is fixing the affordability problem. So as of today, that problem is less relevant than it was a couple years ago.
And how interested is your company in terms of exploring mixed-use development, and what are some of the opportunities as well as challenges there?
We are in the process of delivering about $1 billion of development deals, and most of them have a mixed-use component. And so we see that virtually everywhere on the West Coast, in the especially in the urban and the and even in the suburban markets more and more. The opportunity, I think, is to provide services that are synergistic with the resident experience. So, coffee shops, food venues, etc. And the challenge is that that sometimes it's more difficult to find the right tenant to occupy that space. It is synergistic with the rental operations, and we have more vacancy in the commercial space in some of the locations.
And sticking with development, how are construction costs impacting your pipeline, and what do you have on tap in terms of redevelopment projects?
Yeah, so construction costs are a big factor when it comes to building a pipeline for development deals. And at this point in time, again, with construction costs growing faster than rents, it has the effect of squeezing yields. So we're having some difficulty replacing our development pipeline, although we've made up for some of that by going into a different strategy, which is preferred equity type of investments, where we will finance someone else's development deal as a preferred equity provider. So that's definitely been a factor. We've tried to transition to manage the fact that we have such an issue on costs on the West Coast. As it relates to the redevelopment pipeline, we have a very significant opportunity there. The West Coast in general has an older housing stock, and so there's plenty of opportunity to change specs and hit the new preferences of the new renter. And there's a number of sustainability type upgrades that we can make that make economic sense.
And sticking with sustainability, what role are your shareholders playing in terms of as you look at your broader ESG strategy?
Actually, a very large impact. We recently had an outreach effort to most of our major shareholders, and sustainability is one of the key items on their list. So we have a pretty robust sustainability program. We started doing the GRES survey, for example, 3 years ago, and we were a green star from when we first started that activity until currently. It's a very important part of our business. It's really important to our shareholders, and we're in the process of publishing our first corporate sustainability report that'll be coming out in the next several months.
Great. Michael, thank you so much for joining us.
It's great to be here. Thank you.
For more from REIT Week 2019, be sure to visit NAREIT's website, REIT.com.